Hello, Fausto Botelho here, broadcasting from Brazil, and we're going to talk about Kryptos and, of course, the S&P. Is there a black swan happening right now in front of our eyes? I want to go into the situation that passes on the mind of everyone that has a portfolio in the stock markets today. And then we're going to talk about Kryptos. I'm also going to present the facts, technical analysis facts, by which I understand it's not a very good idea for you to be positioned in the markets nowadays. But whenever someone looks at a fall like this one we've seen in the S&P, it has some reactions like, cutting it right through the point, the human being, it's much more afraid of not winning, fear of missing out, than it is of actually losing what it has, the position that it has. So the market felt from here to here, and everybody is so afraid of losing this portion of a bigger portion eventually of the markets if it comes back, but it's much less fearful of losing, and we're talking here some 15%, 14%, but human beings are much less fearful of losing 33% of their position now, considering the possibility that the market corrects Fibonacci of this upward trend that started after the subprime in 2009. So what goes on in the minds of people that are carrying a portfolio, stock portfolio nowadays, is more or less like that. Well, hell, man, I'm not going to liquidate. I mean, the market felt all that. Look at that. We're 13% away from the top, and besides, the market has recovered from the bottom to the top of day before yesterday, almost 10%. And these recovers are the fuel that keeps people hanging on to their positions, because they, whenever the market that goes down, as everybody knows, in steps, right? Nothing goes down straight in a straight line. The market goes down, and then it reacts, and then it goes down further, and then it reacts or accumulates, and then goes down further. Whenever the market reacts, that is what fuels everybody's hope that the market will eventually go back to more decent levels for the person to eventually think of liquidating their positions. And by that, I mean that it is very, very, very much complicated for you to liquidate a position after the top has been established. So there's only one thing that one can do, in my opinion, to escape this trap that the market poses there for everyone that trades the variable income market, which is for you to put on a person, a sentinel, to take care of your position with direct instructions to eventually liquidate your position if some event happens. And what is that event? Well, in the case that the market breaks a important support, for instance, and that sentinel is called stop loss order. So my recommendation for you that are still keeping your position is that even though you are a buy and holder, think of electing a sentinel. Look at each of your positions and place a stop order. That's my recommendation. Now, in terms of the thumbnail of this video, the birth of a black swan, I wouldn't call it a black swan, because that has been expected. The people that technical analysts and people that study trends, they knew this was coming. The thing is it happening? Well, then now I'm going to show you evidences that are telling me, are actually shouting in my ears very loudly that it is actually happening. Well, first thing is the S&P itself, right? So it felt, this looks very much like a downward flag. And it seems that the market just broke this downward flag. It's 3, 4, 5, 6 p.m. London time, 6:24 p.m. London time, and there is still, though, another 2 hours and a half to the closing, but that is definitely not looking good. I'm changing to the 15-minute bar chart, 15-minute intraday chart of the S&P now, the mini S&P. And as we can see, this support that was established on the 3rd of March has been broken, and the market is just accumulating here, and it definitely seems that it is going to keep on falling. So the market might as well close near the lows today. It's in between now, but very good chance that it closes on the low, and that happening, it will be confirming the downward flag, and that projects, okay, let's go to projections now. Okay, that projects this downside movement downwards from the top of the flag on downwards, which would mean another fall from today's price of 10%, 10.7%. And eventually we would be seeing, if that flag confirms, we would be seeing the market breaking this support trend line here. This support trend line, I have, well, that's a channel. Let's keep it the way it is. I've made some modifications on that trend, but it's all the same. In the end, it's all the same. We have to keep an eye here in this support that has been tested on the first downward movement at the 29th of February. It was tested, 28th of February actually, and it's a very important support, as we can see it over here. There's many technical events happening here. So actually, it's not this one, it's this one here, right? So yeah, let's take a better look here. It's this support here. So we have lots of events happening here. That's a very important support. If it breaks, the market will be confirming the flag, and downwards will go. Now quickly, let's take a look in the Dow and in the Nasdaq. And well, this is very scary, isn't it? That's the Dow deflated index by the CPI, and it comes from 1913, which is when government started to calculate the CPI, Consumer Price Index. And we see that it was all up and away, right? And now it came downwards, and that's a weekly chart. It came below the tops, the very important, I'm sorry about that. It came below these tops, which is very bearish, that because that imposes a, let me just silence this phone here, that produced a bear trap, which is a bull trap. And well, it depends on where it closes today. If it closes near the low, it's very bearish, because it will be indicating that the downward trend will continue. But that's a very ugly reversal for us to have in a place like this. Because you see, as I said in an early video that I posted, it's not the virus itself, you know, it's the height of the market. I mean, the market went too much up. So this is very bearish in the Dow too, and the Nasdaq. I don't have the quotes in real time for the Nasdaq, but we can see that we've had a very ugly reversal as well. That's the daily chart, and if we go to the weekly chart, we're gonna be very close to what's the Dow Jones saying. Now, what can we expect? What are the possibilities for this correction of the market? Let's go to the S&P, which I always say is that is the guy that rules the world, because he carries the most liquidity, right? Well, first of all, we have so far corrected 0.5%, 50% retracement of this upward movement that started in December 2018. This upward movement here, and we could come as low as 0.61%, which would take the market to the this support trend line. And then the market is going to test the support trend line, and it's going to do it probably in the support level here, which is 2760 in the S&P 500. Very well. Now, what if the market breaks the support trend line? If it breaks, then we could expect it to correct 0.382, first Fibonacci correction level of this upward movement that started in 2019. And that would take the market down back to approximately from over here to here, another 33.3%, another third. It would lose a third of its value if it corrects first Fibonacci level. Now I'm going to tell you something, show you something that it's quite scary. What if I say, would you think it's possible for the market to correct until the top before the subprime crisis? It's not that bad, right? I mean, why did the crash of 2008, the subprime crash, happen? It happened because the United States went bankrupted, and all the banks went bankrupted, all the car companies went bankrupted, and so the government had to inflate the market with false money and quantitative easings for it to eventually hold, and then because of that it went into this upward trend line, this bull market, which I think is completely artificial. So what if we would come just to the beginning of the subprime crisis? That was in 2007, the top before subprime crisis, right? Hey, remind you that I just did something we're not supposed to do, right? No hands in your face. Now, coronavirus, so use your sleeve to scratch your face. Yeah, important, because you know we have to be part of those that are staying in the planet. Yeah, we have to fight for that. It's going to be a fight anyway. Now, so if that happens, if the market just comes back to the top, I'm going to show you what's going to happen. This is what's going to happen. That's the top before the subprime, and the market is here. It would come here. It would have to come 43% lower than it is now. Yeah. Now, another consideration. What if, is that correct, what I've said? No, I think I've given you a wrong number. The number is from here to the top, and that would be 34%. Yeah, that would equal the first Fibonacci correction of the upward movement, right? Now, here I have the drop from top to bottom on the subprime. If we take that into consideration, so if we think the market has potential to make a drop equal of that of the subprime crisis, we're talking about a possible fall of 52%. So possibilities are there. One should think very serious about whether it will hold on its portfolio or liquidate. There's 2 hours left for you to think about that. So well, maybe an hour and a half, because it's going to take me half an hour to publish the video and another 10 minutes to finish it. Now, what are the commodities, the very important commodities, saying about what's happening in the markets and in the world? Let's talk about 3 of them. Dollar, well, yes, dollar, 5 of them. 4, dollar index, VIX, rates, oil, gold, and Bitcoin, which we're going to see anyhow, because we're talking about Kryptos, by the way, isn't it? So let's move to the commodities page here in my Enfoque terminal, and just realize that gold, it's on its high of the last since 2013, right? Last 7 years, and heading to its objective, which is around 2000, I'd say. But the projection that I made from these inverted head and shoulders here, it's around 1800. And look at that. And so far, we've had wave 1, 2, 3, 4. We're heading to wave 5, and now we just made wave 4, and we're going to. So gold is telling us there's bad things ahead. I mean, let me hedge myself. Let me go to commodities that don't lose value. Gold, Bitcoin, silver, gold coins. Whenever these crises happen, the gold within gold coins is worth generally 25-30% more than the gold in bars. And you know why? A gentleman once told me he had a gold coins collection, and I asked him, Mr. Peter Murani, Mr. Peter, why don't you have a bars? I mean, certificated in the exchange. We had already here in Brazil a gold futures market. And why gold coins? And then he brought his answer from his guts, you know. He said, Senor Fausto, whenever you have crisis and you have to go to the field to buy food, there is change for coins. No change for bars, but there's change for coins. Oh, you never forget that. Yes, that's why smaller pieces of gold are worth more in terms of the gold inside it than bars, because you don't have changes for change for bars. So gold is telling us something is wrong. Now what else? Oil. Let's take a look in oil. And oil tells us a similar story. Actually, it tells us an awful story. Look at that. Look at what's happening to oil prices. Well, that's crude oil. This is that's WTI. Wow, that's ugly, man. This is definitely. Let's go to the weekly chart here. That's definitely ugly. I think. Well, the market is apparently breaking the support level here. Yes, because if it closes in the low, it will pass by. It won't even stop for a coffee here in this very, very important support level at 40 was it 42.7, 42.8. So oil is definitely not, well, definitely telling us that, you know, the world is retracting. Things are stopping, and that's not good for stocks. Right, so the Black Swan may be coming. We might have seen its birth already, as the thumbnail tells. What else? Let's take a look in the treasury bonds. I was in the VIX here. Let me show you the VIX. The VIX, as you know, is the Volatility Index, and it goes with, let's put it weekly here, it goes with, goes up, market goes down. So the only thing we had above this was 2008. So, and this here, this was the flash crash that happened in 2015. So we're almost there. I mean, breaking these resistance levels here, we're entering in a area that the last time the market did it was when the market entered the subprime crisis. So we're in the edge here in order to for the VIX to give us a very important indication as well. Now, T-bonds, what's happening at T-bonds? Well, why is that? This is definitely telling us that there's a huge flight. Well, see, that's the lowest since 2011, okay? And what's the market telling us? There's a huge flight for quality. Everybody's rushing back to the States and rushing back to gold. Everybody's selling. Out of Brazil, 23, nowadays it must have been 30 or more billion, I think it's reais, I think it's reais, which is a quarter of the dollar, have been withdrawn from our market back to the States. Eventually, my friends, a small portion of this squadron that is leaving the more riskier markets is going to try to land in the very small airport of the Kryptos space, and that may cause Kryptos to bloom up to the moon. That's what I'm expecting, and Bitcoin is sort of telling us that that might be already happening because it's going up. And the last thing I wanted to show you besides that is the dollar index. Well, dollars is falling down now, which is maybe because people are, well, dollar's gonna fall because there is going to be, in my opinion, inflation shown in the US economy because of all those. And now with the market, with a contraction in the market, oh, that could be a deflation, and that's the worst of the scenarios. But that's a subject for another video. So that's it. Let's talk about cryptos now, right? So I hope I didn't miss any of these. So I'm going straight to Bitcoin here, in which I want to just remind you that my analysis is a Elliott Wave analysis based. I take this first upward movement out, and from there on, from $5 on, I count 1, 2, 3, 4, 5. Wave 1, ABC, 2, 1, 2, 3, 4, 5, wave 3, 4. And so waves 1, 2, 3, 4, we're entering wave 5. So far we've had wave 1 and wave 2 of wave 5. But we're now, in my opinion, in wave 3. It's very important that this is definitely a corrective wave, as we can see here in the daily chart. Daily, please. That's hourly. Yeah, daily. This is the wave 4, which is impulsive wave 1, 2, 3, 4, 5. Descending triangle, corrective wave, and then an impulsive wave. So that makes an ABC, and this so far, after the inverted head and shoulders here, gives us a 1, 2, 3, 4, 5. Which I think is wave 1. Wave 2 corrected 50% of wave 1, which is by the book. And now we're, I think, entering a wave 3. If I'm not wrong, then the market is heading back to its last very important resistance level at 10,500. Breaking that, the market is testing for 400 again, and then it goes. To test the all-time high, which is there, and from here we can draw this resistance trend line, which I think is going to be very important. If it's broken, I think it's going to be indicating for sure that we entering. That's what is that's what's missing for us to be sure that we're in wave 3 of wave 3 of these wave 5. Wave 5, as I said many times in the channel here, if it repeats the last portion of wave 3, it is going to $60,000. If it repeats wave 3, is going to $300,000, and if it repeats wave 1, is going to $750,000. My opinion, wave 5 is going to be the biggest one, so it's probably going to be bigger than wave 1, which was till now the bigger. So yeah, $1 million is quite reasonable for Bitcoin to go reach there, set up a camp, set up a campaign, and then, you know, oscillate a little bit there, and that's when I think it will be already the new standard of the world. You know, things are happening much faster than we think now, so I think that's what's going to happen with Bitcoin becoming the standard. Actually, the standard is not going to be Bitcoin; it's going to be the SET standard, Satoshi standard, because things are not going to be coded in Bitcoin; they're going to be coded in Satoshis. Because you're not going to code a shirt in 0.0000123 Bitcoin. You're going to code them in Satoshis. A shirt's going to cost whatever, 325 or whatever Satoshis. I have to make the account. Yeah, I have to make the countings and present this in the next video. The prices of things whenever Bitcoin reaches $1 million. What is a shirt going to cost in Satoshi? What is a car going to cost in Satoshi? What is a Broadway show going to cost in Satoshi? So let's take a look in the cryptos that we're hanging a position in, having a position with, and also the ones we're keeping a close open eye on them. Shall we? Here you go. Well, so far we have recommended here in our service Enfoque calls. Also, we have recommended two coins. Bitcoin, which we recommended here at 88.36, and we have the stop already almost near, almost in the profit side already. Whenever this accumulation is broken, which we think it will be, maybe even today, because it's resembling a rectangle in an upward movement. It's a continuation pattern. So actually, a rectangle is a continuation pattern. So in this upward movement, it should result in the breaking of this resistance level here at 91.50, and then heading to its objective, which is $10,000, the first objective. So that's the one we recommended so far. And also we recommended Link. Well, Chainlink, it's a very important project in the space. It's actually within the 10 most important coins in market cap, and it's been going up ever since. And then it produced this wonderful ascending triangle that which objective is over here in 129,000. No, actually it's 1,360,000 satoshis. Actually 52. Oof, that's a lot. What's that? Yeah, 120,000 satoshis, 139 satoshis. Yeah. Well, anyway, the objective is some 150% up away from where we are now. So far, we've recommended to our customers change of stops. We're in the 1, 2, 3, 4, 5, 6th stop, and almost, as I said, almost as we can see here in the hourly chart, almost with no loss anymore, right? So the art of changing stops is something very delicate. you have to raise your stops, because as long as the market goes within your position, you should start diminishing your potential loss. And whenever the magical moment is reached, and that's when you pass the stop above your entry price, then you have to keep on holding some of the profit that the market is showing you. But you can't put it so close to the market that any whipsaw would take you out. So it's an art, and we have a long experience dealing with that. That's something we discussed every day. We put on new small rules in order to make it as more solid as we can, and as less relative as we can. So that's the two that we're carrying a position with. And now the ones we're taking a look at, which are these 8, 9, 10, 11 coins, which I have to put in alphabetic order and all in daily chart, starting with Augur. Well, that's a call for you to enter, because you know, it's an upward trend. 1, 2, 3, 4, 5 market corrected. That could be considered as an ABC, and now it has so far sort of escaped from this drift pattern here, and it's flagging up. So whenever this flag is broken, and we're going to take a look at that in this hourly chart, whenever we have a signal here, we're probably recommending the buy of Augur. I think it would be a good idea for you to put it in your portfolio. Now, Binance, I am personally long in Binance. We just made a recommendation, but unfortunately we placed the stop very near and very close, and we were stopped down here. So we're expecting to eventually make another recommendation. Now, that's my position, and this is where I'm carrying my stop. My stop, that's my entry price, and that's where my stop is, below this low here at 228,000 satoshis. Next one is not here. Here, yeah. Next one is Ethereum. Well, Ethereum. Well, we had this the breaking of this resistance trend line here, and this resembles a flag or a 10, right, or a pen. So yeah, I think this may be a sign. Actually, in the hourly chart, we haven't got an indication yet, but you know, this could be a upward flag. So whenever this flag is broken, I'm hoping that the market keeps on doing a accumulation here, and then breaks the accumulation and these downward trend line, and then we're going to have a very good indication. But keeping a very close eye on Ethereum. This is Ethereum in dollars. We were taking a look because, as you know, you can sell Ethereum in BitMEX. I have a position here in Bitcoin, and if you go to Ethereum here, you have also a perpetual chart. That's the hourly chart that I was showing, but in the daily chart over here, this was resembling a downward flag, and eventually you can sell that. You can put on your leverage as much as you want, and if you want to open an account in BitMEX, please use the link below. You'll be helping the channel. Thank you very much. As well as in Binance, we take a very small percentage of the commissions that you produce, and it's exactly the same for you. I'm going to be making some tutorial videos on how to use these two exchanges. By the way, let's see if I will release one this weekend. I have to do it in English too. Yeah, just remembering. Yes, I'm doing these videos in English because I plan to provide you my book in English and my course, my pre-recorded course in English as well. So you will be able to get the knowledge that I have accumulated in these 42 years of experience that I have in the market. So that's why my effort here. Eventually you're going to pay me back one of these days if you buy me my course. But it's a pleasure for you for interacting with you guys here and answering comment in the comments. I usually answer all the comments, and I appreciate very much to interact with you guys. So back to the cryptos that we're taking a look at. So if this falls into a bear flag, we're probably going to be recommending a short position in Ethereum, in the perpetual contract of Ethereum. The thing is, this perpetual contract is quoted in dollars, as I think I've shown you here. Yeah, dollars, Ethereum in dollars. That's why we keep Ethereum in dollars here in terminal in our platform. So next one is Itcoin. Well, look at that. We have there's one thing missing here, which is Fibonacci. And well, the market reached first Fibonacci level. If it goes to second Fibonacci level, we would still have some 170% of upward movement for the market to go. If it just goes to the last stop, it's 50% upward movement. So it's a lot of potential in Itcoin. So if the market produces an upward flag here, I think one should keep an eye on the hourly chart and then enter the market whenever we receive a signal from maybe this trend line here. Although this is looking like a pennant or a flag, I think it might come a little bit further down, but it could come to this last stop here and then reverse, and that would be very good. You would buy here with the stop below here, very close. Next one is Matic. Kind of hard because not too many historical chart, and that's happening in the middle of this accumulation here, or in this sideways trend here. So, but a eventual upward flag here, I think might, whenever we have the signal that it's going out of it, if it happens, we might recommend Matic, because from here, from this potential flag to the top, there is 87%. Look at that. So now NEM, well, you should keep a close eye on NEM, because that's a beautiful channel, downward channel, and the first Fibonacci level is over here. This is resembling like a flag, and let us zoom a little bit more way to see it better here. And if it goes first Fibonacci correction level from this downward trend, you'd have some 70% upward movement. Not bad, right? Now next one is Tezos. Tezos is another project that I like very much. It's the one that it's trying to help tokenize all the former economy, all the other assets, and I think that's going to be very important with what's coming next in the financial markets. So keeping a very close eye on it. And in technical terms, it broke this sideways trend here, this resistance, and then it pulled back, and then I think this is going to result in a continuation pattern. It's going to be this is going to be called either a triangle or a rectangle. It doesn't matter. It looks like a continuation pattern. So if we do continue, the objective of this sort of rectangle or button, huge button, it's over here, which would mean from here to there some 126%. Not bad, huh? So now the last one is Waves. No, I don't think it's the last one. So Waves, market broke this line here, this trend line here. Clearly it's on something new in here, and this looks like a continuation pattern, so that's why we're keeping an eye. Whenever it breaks or give us a a sound because today it's almost gave us, but after all it didn't. So it pays to wait sometimes, right? Well, let's see what it makes here, and keeping an eye. Whenever it breaks here, it's probably a good idea for you to incorporate it to your portfolio. What's that I'm showing here is the next resistance trend line. I mean resistance level. From here to there, you have another 50% upward movement. And finally, Zcash. Zcash, is it finally? No, not yet. There's 0x. And so are we breaking this resistance trend line, this trend line, this bear market here? Maybe. Let's see what happens here. Market is testing this important support. If it goes up, if it reverts, I think it's a good idea for you to buy it and close the support, so your stop's going to be closed, right? And so if that happens, if a reversal happens here, it's going to be confirming this accumulation as a rectangle that would, be a continuation pattern and continue the previous movement. So. And where should it go? If you pick it from here to first Fibonacci correction level, 70% or so. And the next one and final one is 0x, which, well, it broke a resistance trend line. Yeah, let's draw Fibonacci lines from the top to the bottom and see what might happen. Well, it already corrected the first Fibonacci correction level, but if it goes to 50% correction, then well, considering that it broke this resistance trend line here and it pulled back, if it produces a pivot, pullback is already made. It looks like it's already made. But if we have to, from here to 50% correction, is 61%. And who knows where can 0x go? It could go up here, and then from here to there, it's another 100%. So this is it for today. I hope you enjoyed the video. If you did, don't forget to give us a thumbs up. It helps YouTube. And give us a help. Tell about your friends in your social media. Tell about us. It will also help the channel. Subscribe to the channel if you're not yet subscribing. Hit the bell so you'll be advised whenever new videos are coming. And I'll see you next time. Ciao.